we are changing things up on Yap's Money Life Show. Instead of my usual sharing, I will be giving you an inside look at the thought process and the level of professionalism which I apply when advising and consulting my client in my practice. I thought rather than guessing what you, the viewers, want, the new format allows me to share financial issues which matters to you. June asked a question, what is the best unit trust to buy? Okay, now I always get this question. Okay, the truth is there is no best unit trust fund to buy, because every unit trust buy underlying investment into certain region or certain asset class. So they could be buying a Malaysia equity fund, or could be buying a Asia Pacific equity, or global equity, or a Malaysia bond. So a unit trust fund may do well in certain cycle, but when certain cycle change, like what I said just now, asset class cycle change, this unit trust fund may not do well anymore. So that is why it's so important to make sure that when you invest in unit trust, don't buy one unit trust fund or two unit trust fund. What you do is to diversify your money into 8 or 9 unit trust fund that diversify into different asset classes, so that you'll be able to reduce the volatility. And when one asset class do not do well, another asset class do well, and overall your unit trust investment can grow steadily and with high certainty.
For the unit trust, it's much different compared to the stock, because stock we can do a fundamental analysis, we can do a so-called company analysis, trading and technical analysis and all that.
Okay. Yes.
Whereas for the unit trust, it is very depending on the leader of the fund manager, because fund manager, normally a fund have consists of few fund manager, but among the fund manager there's one leader.
Yes.
But the key question is most of the time when we buy a unit trust, we can't even have a chance to know who is the background or who is the leader for the fund manager.
Yes.
That seems is not very healthy from my perspective.
Yeah, I will agree with you.
Just like you invest, you are in the so-called that invest in some not invest, you are playing like a F1 racing. You play a bet on the driver, but you don't know who is the driver. Only know the car.
Okay.
It's like I feel it's not logical. So what is your viewpoint on this? We only can know the stock.
Okay.
The stock is not important. It's the driver who is most important.
Okay. Unit trust investing, for most investors in Malaysia, they can only spend time and acquiring knowledge and keep update on Malaysia equity. So that's why unit trust equity fund can play a role to help Malaysian investor to diversify into Asia Pacific, China, US, and Europe equities. So that is the purpose of this unit trust fund. Okay, agree, Aaron?
Yes.
Now, next is that, okay, then the question is that for a share, you can use analysis. You can look at the financial report of the share of the company. You can calculate the PE and what is the estimated PE. So you know whether this is undervalued or whether this is overpriced. Agree?
Yes.
Yeah. But for unit trust, it's very frustrating because you do not know exactly all the share held by one particular fund manager. Okay, so that's the challenging part. So in Wigman, when the client decided to invest unit trust through Wigman, what we do is we always emphasize to the client, do not invest unit trust conveniently. like what I shared with you just now, under the concept of best of breed, for the same Asia Pacific equity fund, there are some Asia Pacific equity fund can do the performance of say 12%, 13% annualized return over 5 years. And there are some equity fund manager can only do maybe 3% or 5% annualized return over 5 years. So that is what I mean by best of breed fund manager. So as a retail investor, you cannot evaluate every share they buy, but at least you can be acting like a boss to judge their performance by looking at the performance in the Leapers table listed in some of the newspaper. Okay, and if you find that that may not give you too much information, because other than performance, past performance, which doesn't guarantee future result, you need to consider what is the volatility of the fund. You need to consider what is the expense ratio of the fund. You also consider to know that the fund manager who used to perform well, whether he still stay in the company or not retire already or move to other company. So that's why that's why you since you are very comfortable investing in share, I would say you can continue to do that. For your unit trust portfolio, which is meant to help you do diversification, I would suggest that you talk to your financial planner. Of course, don't talk to commission-based financial planner. Talk to a fee-charging financial planner. A professional financial planner should be able to help you to evaluate, in every category: Asia Pacific equities, global equity, Malaysian bond, which are the best of breed fund. So then you'll be able to construct a unit trust portfolio based on the best of breed fund and help you to monitor and make sure that those funds continue to perform. If there's one fund do not perform, it's time to replace that fund with another performing fund.
If money is important to you, please remember to subscribe to my channel.